Well, welcome back everybody to lesson number 4. I think you're really going to enjoy this lesson. So I need you to pay very close attention. You're going to start seeing me unravel where I'm going with this club as we go along in this lesson. And I think you're going to get excited. I really do. I hope you've learned something in the previous 3 lessons. Remember, we're building upon each lesson, so please stay in order and keep up with me. Again, I think you're going to get something out of this lesson, and I think you're going to get excited by the time we're all done. So let's get started. What I'm about to share with you is without a doubt the most important lesson you'll ever learn when it comes to building wealth and retiring young and planning for freedom. Now, if you want financial independence, folks, if you want the ability to retire young, if you want to enjoy life now, if you want recognition, we all want recognition. If you want all out of life that there can be, there's only 2 ways to do it. 1, you must own some type of business, and again, I've already alluded to that, and I don't need you to panic about that yet. That's very simple. And 2, you must apply and use leverage and arbitrage, my favorite word, in everything you do. Let me quickly give you a definition of interest, because we may have some college students on here that don't even know what interest is yet. And basically, it's a charge for borrowed money, generally a percentage of the amount borrowed, or it could be a percentage of ownership into something. Sharing something, I have an interest in that company. If I own a share of stock, I have an interest in that company. Or in excess above of what is due or expected. Okay? Or the profit in goods or money that is made on invested capital. So there's several different definitions. Let's define leverage. Okay, and we're only going to use the 4th definition, which is the use of a small initial investment, credit, or borrowed funds to gain a very high return in relation to one's investment, to control a much larger investment, or to reduce one's liability for any loss. Now, I'm also going to be discussing a different type of leverage today as well. So that's also known as OPM, other people's money, or OPE, which we'll also be discussing, which is other people's efforts. That's leverage. So we're going to explore 2 types of leverage during this video: investing with leverage and leveraging time and people, because they're both very, very viable and very critical. So investing money with leverage. Most people try diligently to save money so that they can retire someday and maintain the same standard of living during those retirement years. That's why you guys are on here. You're looking for alternatives. You may be, I got you because you're one of those people sucked in a 401k plan. You're putting away money to invest so that you can live off the interest in your retirement years. But most of you are going to fail because you never understood the concept of leverage. You may understand the concept of leverage, but you've never applied it because you didn't know how to apply it. Well, in reality, you are applying it every single day. You're just making other people rich. When you invest in a mutual fund, you are using leverage. And you'll see that as I unfold during this video. So most of you are going to save money investing in mutual funds, bonds, stocks, and you're going to do it through shells like your IRAs or your 401k plans. And some of you may have a rental property. And your goal, again, is to earn interest on that money so it will grow in value over time, and you're thinking you're going to live off this interest when you retire. The problem is, folks, is you're never going to earn enough interest to attain your goals. It's not going to happen the way you're doing it. Look, let's say you earn $100,000 a year, and I'm sure you want to maintain the same lifestyle in retirement that you enjoy now. Well, you're going to continue to need $100,000 a year if you want that same lifestyle. But let's go ahead and take the advice of some of these planners and assume that you can live on 75% of that, since you no longer have to save for college, you don't have to save for retirement. In other words, you're not putting money out for that every month, and let's say you pay off your house. Okay, so you only need 75% or $75,000 a year to maintain your same standard of living. And let's also assume that you can earn an 8% return on your money. This is interest, and you can earn that 8% steadily and without change, which we know is not going to happen in most cases. Okay, you're going to have to save not $500,000. You're going to have to save $937,500 to maintain your current standard of living. So, in other words, to have a $75,000 of current income 30 years down the road, and you're earning 8%, you'll need $937,500 to produce that $75,000 a year. And we also have to factor in inflation and match it to today's dollars. I'll show you this in a moment. I know you may hate this, but we're going to go back to my spreadsheet in a moment. In fact, let's just do that right now. Alright, so here's what the market did over 30 years. And here's if you put money in the market. But let's go down here to my fixed returns, where there's no fees involved, and let's say you can earn 8% on your money. Guys, you are going to have to put away $1,500 every single month for 30 years for that money to grow to $2.42 million. And you're excited about that. You did it. You're a multi-millionaire. The problem is, if we're starting from today, that $2.42 million at a 3.27% inflation rate, which is what I showed you in previous videos, is but the average for America for the last 100 years, and we know nothing works in averages, that only equates to $908,000 in today's dollars, which is less than we said you'll need 30 years down the road. Okay, you need to save $1,500 every single month for 30 years to produce enough income at 8% to maintain your standard of living. By the way, just to show you what that same money would have done in the stock market over 30 years, it would have grown to $1.4 million. And once again, I'll point out that 12 years ago, it was about the same amount of money. You had no growth in the last 12 years. So we know that's not an alternative. And that includes fees, by the way, 1.27%. So do you understand that? You were putting away $1,500 a year. We have to factor in inflation because it's real. And this is what the government tells us inflation is. This does not include energy or food, and it's a weighted basket. And they manipulate that weighted basket so they can maintain inflation levels where they want the public to believe inflation's at. Oh. So there's all of our factors. So here's the problems. First of all, very few people can save $937,500 during their working years. So most people will work 30 years, and again, you'll have to save a little over $18,000 a year to do that, or over $1,500 a month. Now, maybe your employer is giving you a $500 match, so you're only putting in $1,000, but it's still $1,500 a month. And as you know, very, very few people will receive a return of 8% on their money. In fact, investing where you traditionally invest over the last 12 years would have produced less than a 1.82% return, not factoring in fees. And less than that if your money's been sitting in the bank, in treasuries or CDs. Remember, it's the losses that kill you. I just showed you that if you had that same amount of money going in the market over the last 30 years, it would have not performed as well as your 8% bucket. And again, I told you about why I think the market's going to remain stagnant for years to come. And again, we know that nothing works on averages in the markets, and fees will eat you up. So I'm just rehashing some of the things to pound in your mind what we've talked about. So there you have it. That's what you'll need to do to maintain that standard of living. So if your standard of living's less, it doesn't matter. You're going to have less to save. It's all economies of scale. Now, I know you may be a little confused, but stay with me. This gets fun, all right? Smart investors use leverage to build wealth. All right, let's say you decide you want to buy rental properties to build wealth. Now, I want to reiterate. This whole club is not just about real estate investing. There's tons of those types of coaches out there. It is a very viable way to invest, but there are easier ways of doing it. I'm a firm believer in real estate, okay, but not in the sense that most people do it. And by the way, fix and flips is not investing in real estate, folks. That's a job. Because every time you close a deal, you need to go find a new deal. That's just a commission job. So get over that. We're talking about investing in real estate. So you go out and buy a $150,000 condo. You'll need, since it's an investment property, you're going to need about 20% down payment or $30,000. So you borrow or you leverage $120,000 at 5% for 30 years. So your total PITIH payment, principal, interest, taxes, insurance, and homeowners fees, let's say, is $900, and you're able to rent it out for $1,000. So you earn $100 a month or $1,200 a year in cash flow. So if you look at that, it looks kind of pathetic. Your return on your investment, your your $30,000 investment is only 4% annually, and that doesn't factor in if you have any problems with maintenance or anything. But the renter is paying down the loan, creating you more equity, and the property will more than likely appreciate or go up in value over time. So you're still getting a return on your money physically, but you're also getting it hidden. It's hidden, your return. So in 30 years, if your home doubles in value, your $30,000 investment is now worth $300,000. And you've collected $36,000 in net rents, if you never raise the rent. But with inflation, you'll probably raise rents. So your $30,000 investment, because that's what came out of your pocket, is now worth $336,000 to you 30 years down the road for an annualized return of 37% on your money because you borrowed money. You used leverage. You put the risk on the bank. Now most of you, if you have $100,000, you invest in mutual funds, stocks, bonds, etc. using no leverage. And if you're lucky, you may get 8 to 10% on your money annualized, and as you know, that's highly doubtful. In fact, it's not happening, and it won't happen. You could buy 3 condos with $100,000 and at the end of 30 years have over $1 million in equity or savings. Now, if you were able to get that 8 or 10% on your 100 grand, it would grow to about $1 million also. But again, it will never happen because the market has years where you lose money. And by the way, United States currency is fiat, fake, and real estate is real property. If we came to a doomsday, would you rather hold real property or paper money? So if you're investing and saving money in typical investments, you've not seen any growth at all for over 12 years. Now here's something I just read yesterday. I always go on these discussion boards. I have Google Alerts set up to see what people are saying about 401k plans. And my jaw drops every single time. I never engage in the conversation because I just feel like saying you guys are idiots. But this guy's bragging about somebody's theory of how to make your 401k perform. And he was bragging about it, how it's done so well for him. And basically this theory is every time you get a 10% increase in your 401k, liquidate all your investments, all your mutual funds, and park your money in a fixed environment because the markets go up and down. The idea is you'll lock in your gains and eventually the market will crash. And once it crashes, you'll notice it. You'll know it crashes. That's pretty obvious. Then you start and you buy more mutual funds and then you go back up to 10%. Let's go back to my spreadsheet and take a look at that theory. Whoops. Okay. So let's just go back to the beginning of the market 30 years ago. Alright, so this guy has money in his mutual funds. He starts right here. He's up 6.61 up. He doesn't lock in, then he loses, and then he has one huge month where his funds are up 15.2%, so he liquidates to lock in his gains. So now he loses the 1.85%, he loses the 10.5% gain, he loses the 1.32% gain, he loses the 2.34% gain, he loses the 2.66 gain, this gain, this gain, this gain, this gain. Altogether he lost about over 20% gain in 1 year. Then the market's down. Then the market's down, down, down. You understand what I'm saying? You're missing the upside of the market to protect yourself from the losses, and I know that sounds contradictory to what I say because it's the losses that kill you. What I'm saying to you is just a dumb theory altogether. Playing this market altogether is just a dumb theory. But there are already ways to do that. Let me explain. If that's what you're trying to do, there are better ways. I have a strategy where you buy dividend-paying stocks. You buy the stocks that pay dividends and you buy options against those stocks. Call options. So no matter what, the worst you're going to do is get the dividends. So you're always going to get positive return on your money. Always. You can also do leaps, which are just long-term options, where you're hedging. All options were designed to do was, until they became toys for people, is to protect you or hedge you against losses. Leaps are long-term options. Heck, there's index annuities where they'll cap you at a certain point, say 6 or 7% on the upside of the market, but you can never lose money. But they do that every month or every year. So there's no guesswork involved. Okay, so but if the market's up 20%, you're still only going to get 6%. But if the market's down 20%, you get credited with 0. So when you average it out, you're probably going to get a 3% return on your money. Again, averages, there we go. But there's so many different options of doing this. All these theories, man, people just trying to sell more stuff to you. Just quit playing the game, and you'll win. Okay, it's because of the ability to leverage real estate that real estate has produced the most millionaires in the United States, because people can leverage it. You're using other people's money for the majority. Now, I understand many of you don't have $30,000 to buy a condo or whatever, and that's fine because we're going to fix that anyway. But it also should be noted that you can borrow money to buy businesses, to buy stocks, and just about every single other type of investment too. So whatever the investment is, when you find better investments, which I will expose you to, you can still leverage and borrow money to play the game. Now this is probably my favorite slide, so I want you to pay very close attention. This is a whole nother angle. Okay, this slide is the whole concept that I created my coaching program over. So please pay very close attention. Let's say you borrow $1 million at 3%. And the interest is the fee you pay, typically quoted as an annual basis, as I've said earlier. So you're going to pay $30,000 a year to borrow that money. Now you take that $1 million and you turn around and you loan it to people that buy cars. Now they must put 10 or 20% down on the car, and you're going to charge 8% interest, and of course you're going to be the lien holder. You're going to collateralize the car. So you're going to earn $80,000 for the year. 8% on $1 million. You have a net profit of $50,000 for sitting on your butt. Folks, that's free money. It's infinite rates of return because you have nothing out of your pocket. You can't measure the return on your money. So it's infinite rates of return. And keep in mind, as you're scheduling these loan repayments for 5 years. So at the end of 5 years, you have the $1 million back in your pocket. And you turn around, you do it all over again. This spread between 3% and 8% is called arbitrage. And it's the most important investment term. So you have leverage and you have arbitrage. We just used leverage because we borrowed $1 million at 3%, and we created arbitrage to create free money. So I just described to you how the richest industries in the world makes money. You just became a bank. See, all banks do is they encourage you to deposit your money, and they'll pay you an interest rate. Now right now it's below 1%, but so basically what they're doing is borrowing your money and re-loaning it out, and oftentimes they loan it right back out to you at a higher interest rate. Sounds pretty foolish. That's why they're the richest industry in the world. They maintain liquidity in their money, they borrow from you cheap rates, and they loan it right back out to you at higher rates. Or they'll loan it to your neighbors or friends, co-workers at a higher rate. Now they can do this because they have it's a centralized place where people can go. So as our education continues, oh, and by the way, banks can loan out 10 times of the amount they have on deposits thanks to the Federal Reserve System, which is another problem for a different discussion. But as our education continues, I'm going to show you how to create your own family insured banking system. And no time could be better than now to fund your bank. Okay, what the hell does all this have to do with you? You know, I threw a lot of terms at you that I will be educating you on in the future. Besides, you probably don't have $100,000 or $30,000 or the ability to borrow $150,000 or $1 million. But you do have the ability to leverage and earn today. Next to using leverage and invest in real estate, the second most millionaire producing strategy is by people that learned how to leverage time and people. And this is something you can and should be doing starting right now, regardless of your background or your current situation. Your entire life you've been taught by our government, our society, our parents, our teachers, our grandparents, everybody around you to acquire a skill and then trade your time and skill for money. The problem with this advice is very clear. Time is finite. There are only so many hours in a day, in a week, in a year, and in our lifetimes. So let's imagine for a moment. You're paid $20 an hour for your time and skill. You work 24 hours a day, 365 days a year, which is impossible, of course. You work a total of 8,760 hours in 1 year. That's how many hours are available in 1 year. And you're paid $20 an hour. Your earnings max out at $175,200. And that's not bad income. But you physically cannot work that many hours in a year. So a more realistic view is 40 hours a week, 50 weeks a year, for a total of 2,000 hours of trade. So taking your traditional advice from the world, your trade will max out your earnings for 1 year at $40,000. That's it. You're only worth $40,000 a year for what you have to offer. Now see, I talk to people all the time that think they're doing very well. They may be making $100 grand a year, $150,000 a year. But these guys trade 70 to 80 hours a week for it. They have no time for family, no time for vacation, no time for their kids, no time to socialize or party. They have no time for anything but work. They have never stopped to think about what they're giving up and what that breaks down to. If you think about it, you're making 100 grand a year and you're trading 70 to 80 hours a week, you're only earning about $30 an hour. So don't think because you make 150 grand a year that you're some hotshot. What are you sacrificing to make that? Add up your hours. If you travel a lot, even while you're sleeping in the hotel room, that's work because you're not home doing the things you should be doing. That's 8 hours. You're probably making less than $30 an hour. Now, to be very clear, fewer than 5% of all United States citizens earn $100,000 or more. So if you're in that, if you make 100 grand or more, congratulations. There's only 5 out of 100 of you doing that. But of that 5%, a full 85% of them own some type of business, small, large, home-based, and part-time. So if you're making 100 grand a year or more and you don't own a business, you're in the very small majority. Your time. Look, you, like everyone else, only have 24 hours in every single day. Yet, why is it that most people make $25,000 a year? Social Security Administration tells us that 50% of Americans make 25 grand a year or less. But yet some people make over $1 million a year with the exact same time. Remember, I was making over $1 million a year. What made me special? See, because you typically trade your time and skill for money. So if you don't put in the time, for example, you spend your time on family, you spend your time on vacation, soccer games, etc., you're just not going to get paid money. And this is what you've been trained to do your entire life. It's a vicious circle. So wealthy people use leverage to build wealth. Why the owner of the business you trade your time for will always make more money than you? Because he or she understands leverage. Look, let's say you're out there looking for a sales job. Let's say I own a sales company and I sell tubs. Let's say I sell bathroom remodels, okay? And I can do 2 sales a week. All right? I have a finite amount. I average 2 sales a week. I have a finite amount of money I can make, but I own the company. So I can go out there. I'm the one that gets the work done. I'm the one that generates the leads, or whatever you want to say. I run the company. So all I do is place an ad in Craigslist, and I say I'm going to leverage myself. So I hire one salesperson that does 1 sale per week. I hire another salesperson who averages 2 sales per week. And another one averages 1 sale per week. And finally, I hire a 4th salesperson who does 1 sale a week. Now, assuming I pay them a 50% commission, which is high, it costs me, the business owner, 0 money, not a penny, to increase my net sales by 2.5 times because I leverage these salespeople. And these salespeople cannot leverage unless they spawn off and start their own bathroom remodeling business, which most people won't, or if they do, they will fail. That's leverage. That's why your boss will always make more money than you. See, the maximum time you can put into your business is 8,760 hours a year. That's working 24 hours a day, 365 days a year. So by hiring just 3 people, your maximum work hours increases by 26,280 per year. Now, if the boss only makes $1 for from you. For every hour you work, he increases his income by $26,280. And you have no opportunity to leverage. Only the boss can. And the boss can hire 6 people, 9 people, 12 people. And if you're not panning out, get rid of you and bring someone else in. See, the only way you're ever hired for a job, the only reason you're ever hired is if you can make your boss more money than he's paying you. Even if that's a dime. That's something I talk to business owners when I'm helping them with their marketing. They think if they don't double their money, if they spend $500 on marketing, they have to at least make a $500 profit. That's not true. If you make $1, you got to understand there's exponentially other things that come with that. And again, I digress. But the bottom line is, your boss will not hire you. You do not have that job you have unless you're earning him money. Him or her money. And the minute you quit earning him or her money, you're gone. See, and that's the problem with the corporate model. The CEO knows how to leverage. He hires vice presidents. Vice presidents go out and find middle management. Middle management goes out and fires administration positions. And then there's distribution channels. The people that do all the work, the distribution channels, because everything starts with sales. There's no money for any company in the world unless there's sales. Everything begins and ends with sales. So the people doing all the work and keeping the business alive has no opportunity to leverage. Money's flowing up. Now, let me put this in real world experience. Problem with normal small business model. This happened to me. This is a true story of my insurance agency. And I'm just using basic numbers here to keep it simple because you'll get the gist of it. I was the broker. I was the top man on the totem pole. I, like everyone else, had finite hours. I could only do so many seminars a week or a month. I mean, even I burn out. So I decided to go out and hire some sub-agents, some insurance agents, to go out, and I would teach them everything I do. I would mail for them. I'd put them up on stage. I'd let them do seminars. I'd train them. I gave them all my proprietary information. I taught them everything I knew, even though none of them could ever figure it out. All the tools they would need on a successful business. Because remember, I was making over $1 million a year, and I was handing them everything. Okay? And the idea was they'd go out, I could multiply myself, right? And I'd earn commissions or overrides off their sales. The problem is I didn't understand that I wasn't giving them the opportunity to leverage as I had. So what inevitably happened? 2 of them burned out and couldn't make it. Okay? And the 2 that actually worked always thought the grass was greener, so they spawned off and started their own insurance companies. I actually had to sue one of them. Here's this true story. I wake up one morning, I'm reading the newspaper, and I see my ad in the newspaper. I used to run ads in the newspaper. That's one way I marketed for live seminar events. And I see my ad word for word in there. I call up to my ex-wife. I said, "Did you put this ad in the paper? We don't have a seminar this week. Did you run this ad?" Because I'm thinking the newspaper messed up. "No, I didn't run the ad." And I look at the ad a little closer, and at the very bottom, it was my ex-broker, my ex-agent running the seminar. He took my ad word for word. So first of all, it caused confusion because I had repetition. People started seeing my ad and noticing it, and my seminars grew over time. Now this guy's using my exact same ad, but sending them to his seminar. And I had to sue him to cease and desist. And I won, but it was too late. So basically I trained him, I provided him with everything to be my direct competitors. Worse yet, if they decided to hire an agent below them, I indirectly trained my competitors. This became a nightmare for me. Now luckily none of these guys were as good as I was on stage, but they still were a pain in my side. They were a thorn. These guys don't understand money at all. It didn't matter how much I explained it to them, they still didn't get it. But it was still a hassle, and it cost me money. I didn't make money from trying to hire these agents. I lost money in the long term because they stole customers from me. So what I should have done is taken my own advice and apply the principles of leverage. Here's the solution. If I'm going to train them, provide them with all the tools to take all the risk, you know, what if I just charged each of these agents I took on $100 a month fee to have access to all my intellectual property? And then I divided that $100 by 5 and decided to pay everyone below me for 5 levels, $20 each from that $100. I could have done it with commissions. I could have done it with $200 a month. It didn't matter. I'm just trying to make a point here. See, this way, these people who spawned off and started training other people, I'd still be making money off of everybody. There's no reason for them to directly compete with me because they're not paying them anything but $100. And people will pay $100 all day to avoid a lawsuit and to use all of this stuff I developed. And then when they hired people, they get to use all the stuff I developed, and they're paying $100, and he gets a portion of that $100. Then the rest flows to me. Down here, they can hire agents that pay $100. He gets a portion of that 100. He gets a portion of that 100. He gets a portion of that 100. She gets a portion of that 100. And if there's any left over, then I get it. When you come in at the 6th level, I don't get any, but that $100 is still charged. So if I'm willing to accept less commission from each sale and structure it differently, will I make more money? Of course. This guy's making $520 a month off of all these people he trained using my systems. This person's making $300 a month off the people they trained off of my systems. And I'm making more money. I'm making $520. And all I did was provide my systems and trained these 2 people. So what I've just described to you is network marketing. But come on now, don't run off. This is not about network marketing. This is about the principles of leverage. And if you're in network marketing, you should use this example. Because that's what you're doing. It's leverage. The problem with network marketing, and I'm going to have a whole session on network marketing because I believe in it. It's not right for everybody. I'm involved in a few of them. You're going to be introduced to them because they help with what we're trying to achieve, but that's not what we're here about. I'm about leverage. The problem with network marketing is they're throwing out so many products that are useless. And you can't win with useless products. Even though most network marketers will tell you you're selling lifestyle. That's baloney. Everything starts with product. If you can't move product, no one makes money in the long run. So to have true leverage, folks, to have true leverage, you must create a situation where everyone involved has an equal opportunity for gain. When I was just hiring people to be agents underneath me, they had no opportunity for gain. It was not in their best interest to hire other agents and make overrides themselves. This is the nature of people. See, all of us have network marketing embedded in us. A lot of us will go work for someone and say, I'm going to learn everything he does and I'm going to start my own business. That's what we think. But then you start your own business, the people you hire are saying the same damn thing. I'm going to go work for this person, I'm going to start my own business. And it's a feeding frenzy. So if you provide everyone an equal opportunity for gain, everybody can win. Right? If I gave this employee, all these people the right to hire sales reps underneath them and give them a portion of my 50%, then they're going to be more motivated. And they're going to train those people, leaving me, now I'm on a cruise ship while my sales organization is growing. Let's take a different look at this. Because now you're all freaked out because this is all about network marketing. No, it's not. It's about business. See, all business owners, every single one of you, if you own a business, every business owner you've ever talked to is in the exact same business. They just haven't figured it out yet. Okay? They just have different widgets. One might sell teeth whitening. One might sell pizza. One might sell massages. Those are widgets. Bottom line is they're all in the exact same businesses. Every business owner is in the marketing and sales business because you can be the best dentist in the world, the best masseuse in the world. And if nobody knows about you, you're broke. So what I'm going to do in this example is we're going to make our widget a limo service, which is pretty big business. In this scenario, let's say I'm good at marketing my services and decide to expand my fleet. So I now have 8 limos at a cost of about $100,000 each, or $800,000. These are town cars. These aren't stretch limos. These are Lincoln town cars. So my car payments, 8 payments at 8% for 5 years, is a total of $16,221.12 per month, because I didn't have $800,000 laying around, and we always leverage anyway. My insurance is around $1,000 per month, actually much higher than that. I have to lease out warehouse and office space. That's about $5,000 a month. I have staff for fleet maintenance, car detailing, dispatching, payroll. That's another $15,000 per month paid to my employees. So my total monthly expenditure is $40,000 with miscellaneous. Now, assuming I can keep each limo occupied twice a day at $100 a trip, that's total monthly revenue of $48,000. But I got to pay the driver a fee of $9,600, and I got to pay for gas on those trips of $10 a trip, or $4,800. I have a negative monthly cash flow of $6,400. So the only way I'm going to win this is if I can get those limos occupied 3 times a day. And you're not going to be able to do that every day. So you wouldn't last long, but you can see this is a full-time job. A lot of overhead, a lot of liability, a lot of headaches to make some type of profit that isn't as good as you might think it could be. I'm going to own a huge limo company with 20 limos. What if you were still good at sales and marketing, and you could still book those same 480 rides from your basement? The 2 rides a day for those limos, 8 times 30, how many days there are in a month. And you could still book those 480 rides from your basement, and you brokered the rides out to other single drivers with their own cars. Are you seeing the light bulb go off here? They're responsible for insurance on their own car. They're responsible for the gas. They're responsible for their car payment. They're responsible for parking their car or storing their car. They're responsible for cleaning and detailing the car. You are just a sales organization, and you have 1 car. You're just a sales organization. You collect a finder's fee of $30 per booking for a total monthly revenue of $14,400 because you used leverage. Who did you leverage? Other limo drivers who own cars. And trust me, everyone that's ever drove a taxi or anything like that wants to buy their own car. There's a lot of these single people out there. They think they're going to get rich, but they're not good at sales and marketing. They may have 2, 3, 4, 5 clients, and they're barely paying the bills. But you're good at sales and marketing. You already proved it. You could hire 3 kids to handle all bookings because there's software and dispatch. There's software for this stuff. Hire a sales rep and pay him $10 per booking forever. So you're only making $20 per booking. A sales rep to go out to corporations, rich people, to sell your services. You never have to spend a minute in this business. You could sell this business for $1.7 million. That's 10% annual return because you're not needed for the business to function. Remember, we talked about that. The business goes on with or without you. Do you see why if you master sales and marketing, you will never have to worry about money again in your life? Now you can apply this same model, leverage, to any business. Just become a sales and marketing organization. Generate leads in business. Go out, form your LLC, your corporation, and then you sub everything out. You never physically have to do any of the work. You just create sales systems. Now I'm just planting seeds. Now there's always caveats. Some of these drivers are going to steal your business. But it's not going to happen as often as you think because they haven't mastered sales and marketing, and not to mention they're afraid of losing your gravy. If you find out they stole one of your customers, okay, you're not getting another call from me. And they're afraid of that. And you can also sign a no-compete and strict contracts. Some of them are going to be irresponsible and not show up. That's why you always have to have your car as a backup car. I mean, you can find caveats all day. Who gives a damn? It's a better model. Why build a huge limo service and then take all that risk when you can just master sales and marketing and broker everything? Again, this is just a limo example. You can do it with any business. Real quickly, I want to talk about different types of income because it's very important as we go forward. And believe it or not, there are different types of income. Now, although all income is good, some types are much better than others. First, you have fixed income. Now, this is typically what you'll get from a job. You work X amount of hours at Y per hour. You work 40 hours a week, you get Z. Many senior citizens are on fixed incomes. Sorry, my phone was going off. Many senior citizens are on fixed income or some form of Social Security benefits. Then you have variable income. Okay, this is also known as commission or payment per transaction. This is what most people that become self-employed get trapped into. It's typically higher paying, but you're essentially unemployed after each transaction. Fix and flips, variable income. Real estate agents, variable income. Dentists, believe it or not, variable income. Masseuses, variable income. Pizza parlors, variable income. Every time you sell something, you have to find someone else to buy it from you. Okay? Just to keep the income flow. Then you have dividends. Some people invest in a company as a shareholder, and that company may pay a portion of the profits out to shareholders in the form of dividends. That's very, very good income. Fewer and fewer companies are paying dividends. And then you have residual income, and that's what you're all after. This is what you're all striving for right now. This is the pinnacle of income. Residual income or passive income is income you make over and over again from something you did once. And there are basically two types of residual income. Investments, which is interest income. You own a property and you collect rents. You collect interest off of investments. Dividends and interest are residual but not always reliable. Annuities, settlements, etc. And business. You sell a product or service that people pay you for every month or year. We're going to come back to that in the next lesson. Now these two slides are a little bit out of order as far as I just need you to start thinking about different types of income. Most of you guys right now are either on a fixed income or variable income. You need to get on residual income, passive income. That is your ultimate goal. That's what you're striving for ultimately when you invest your money anyway. Ultimate leverage. This is where we're going to get real down dirty. Why you need to promote this club. I am jumping way ahead of myself, and I'm going to go into this much deeper in the 12th and final lesson, but I'm going to give you a teaser here to get you excited. Imagine. I want you to imagine for a moment. We have hundreds of members in the Today You Start Club from all walks of life, all with different amounts of investable money. You may have $100. That's all you can manage to invest. Someone may have $100,000. Someone may have $1 million. But we have hundreds of members in this club. Okay? As I said, everyone has different amounts they can invest. But as a group, and by leveraging one another, your opportunities are limitless. Limitless. Imagine. You play like the insurance companies, the richest industry. Yes, by the way, insurance companies are even richer than banks and safer than banks. It's the richest industry in the world. See, everyone thinks insurance companies buy treasuries primarily. No, today they are the largest purchaser of tax liens. I'm not going to get into what tax liens are, but it's the safest investment in the world. And you can get anywhere from 1% return to 16% return on your money. Depends. But when you have big money, big blocks of money, you can demand blocks of liens at higher rates, so these liens never even make it to auction. It's not uncommon to get 10% or more when you can go in with $1 or $2 million to buy blocks of liens. As a group, in the Today You Start Club, you could pull together $10 million easily. Easily. And you're now a player, and you can do the same thing that insurance companies are doing. You can get real returns on your money that is real safe. See, together we will form an investment trust or club. Then we're going to hire some, and this is just a lean example. There are several different opportunities out there that pay very high returns that are much safer than your traditional investments. You hire someone to go out and buy your tax liens. Pay them a percentage. Who cares? Don't worry, I know these people. So even after fees, you're earning 10% return or maybe even an 8% return in the safest investment of all. Maybe you're only earning 6% return, but it's safe. And you're going to get a few of these properties free and clear because people won't redeem their taxes. And then you say, okay, we're going to sell each unit to this club for $100. So we have 100,000 units. That's $10 million. So if you have $100 you just want to invest, you can buy one unit and earn your 6, 8, 10%. If you have $1 million, you can buy a million, 100,000 units. Now everyone, regardless of your status or money to invest, can earn 10% on your money safely and predictably. And as we progress, I'm going to talk more about property tax liens. Not in the first 12 lessons, okay? I still have fundamentals to get covered with you guys. And as we progress, I'm going to show you how you can build wealth with just this $100 a month to invest. Are you starting to see the bigger picture yet? What I'm trying to achieve here? I understand. See, that's the power of leverage. Folks, that's how mutual funds work. But you give the control up to some asshole on Wall Street. See, mutual funds were created so people with small amounts of money could still invest in the markets. And who benefited from it? Wall Street, of course. When you have your own club, investment trust, you guys control it. You're going to have to pay someone to manage. You're going to have to pay someone to make sure the ducks in a row, but it's you guys in control. It's like owning stock in a company. Companies can go out and invest in anything they want. Many of you are not accredited investors. You're not allowed to invest because the government thinks you're too stupid to invest where the big boys invest because you're not accredited, which means you don't have a certain net worth or a certain income. You're too stupid to take on the risk. But when you invest in companies, you can buy stock all day long, and you invest in stock, they can go out and invest in these companies or these investments. I hope your head's spinning. I hope you're starting to see the light here. So it's in your best interest to promote this club as well as mine. See, after lesson 12, you will be given the opportunity to join this investment club and earn a residual income by enrolling your friends, relatives, neighbors, co-workers. Will there be a fee to join this club? Yes, that's how I make money. But I'm going to pay you a portion of that fee to refer and enroll your friends, relatives, co-workers, etc. to the point where you may not even have a fee to be in the club. And it's not some outrageous fee, believe me. This could be your entire side business we've been talking about, just referring people to this club. And by the way, you don't have to be a member to promote the club and get paid. You may decide you don't want to be a member of the club, but you want to promote it, which is kind of silly because you shouldn't promote anything you're not willing to do yourself. But that's fine. I'll still pay you because this is not network marketing. I don't pay 7 levels deep. I pay 2 levels deep. And you don't have to be a member. You don't have to pay a dime to promote it. So it's a real side business for you and an opportunity to be part of a like-minded community and invest where the real players invest. Now don't worry, I'm not asking you to do this now. I just wanted to plant the seed. We're going to wait till we get to lesson 12 where I go into it in more detail. And that's when you're going to be asked to make a decision. I'm not going to leave you hanging. I'll keep educating you if you choose. But the club is going to be different, and you're going to want to be a part of it, as you'll see. So if you missed it with all my ranting and raving and my digressing, the 2 most powerful concepts when it comes to building wealth are leverage and arbitrage. And I will be coming back and referring to these 2 concepts over and over again with just about everything we do. And remember, leverage is not just money, it's people and time. And arbitrage is simply spread. Leverage other people's money, other people's time, other people's resources, knowledge, networks. You understand that? Right now you're leveraging my knowledge. Later you'll leverage my resources, and I'm going to leverage your networks. You can leverage other people's skills. Why shouldn't you be able to make money off something that you have no ability to do, excuse me. You just need to make sure that everybody wins and provide value. And then of course arbitrage, the spread of money. You can earn infinite rates of return. You buy low, sell high. It's how banks get rich. And it's how you benefit from something that's not yours. Alright, I hope you're as pumped up as I am about this. I wanted to give you, like I said, a precursor to what's happening, what direction I'm going, how I plan on making money, because I'm sure it's on your mind. How's this guy going to make any money? And I hope you see why this is very beneficial to you when it's all said and done. But in 5 days, I'm going to unveil the Wealth Building Pyramid, the 7 simple steps to freedom planning. So keep an eye out for that email announcement. Until then, go out and promote this site. In fact, I don't think I want you to do that yet. No, because I'm not going to be able to track the people to you. And because I'm going to be paying you folks, I don't want you to start promoting this site until after the 12th lesson, and until after you become a member of the club, or if you decide just to be a rep for the club and promote it. So let's just keep it under our hat for now. I'll keep promoting it. I'll get enough people in here that we can make a difference, and then once we get that club opened up after the 12th lesson, things will change dramatically. But until 5 days, I want you to have a wonderful week. I want you to think about what I talked about. Start getting your wheels turning. Start looking at different investment opportunities that you can possibly bring to me, because now, through the power of this club, you'll have the leverage, the ability to do things that you didn't have the ability to do before. All right, folks, here's to your wealth. I'll see you in 5 days. Remember, reach out to me, leave a comment, and I'll talk to you soon. Bye-bye.